Good afternoon. We're going to go over our Forex trades for today, Monday, March 21st. This short week, considering Friday is Good Friday. We did have a correlation trade, which we put on towards the end of last week, which is in pound yen to US dollar Japanese yen. We'll go over it in a minute. We picked up 17.7 pips on a size adjusted basis. On a non-size adjusted basis, 92.8 pips. You can see these two here, US dollar Japanese yen and pound yen. They're highly correlated. They became uncorrelated from the Fed announcement last week, and we were able to capitalize on that. They got to a spread of about 550 pips. We closed it this morning, a spread around 380 pips. Like I said, picking up 17.7 on a size adjusted and 92.8 on a non-size adjusted basis. Let's just go over the economic news from this morning. Existing home sales came out, missed estimates, crashed the most in 6 years. We've been warning about housing market, existing, new homes, whatever, and it's starting to pick up steam. Collapsed, like I said, the biggest crash in 6 years for the existing home sales came out this morning. National Association of Realtors is blaming the slowing economy. Well, we've been telling you that for the past year or so. Goldman Sachs lowered first quarter GDP to 2.3% growth annualized from 2.4% growth. After weaker existing home sales, they said less residential investment than they previously projected. Again, we've been pounding the table that real estate is going to take a downturn, and it started, and it actually looks like it's picking up speed. If China absolutely does collapse, their real estate market does collapse, that's a big thing you guys got to be aware of, as their mortgages outstanding are 4 times as large as what it was when we had the financial crisis back in 2008. The other piece of information, Citadel, which is one of the largest hedge funds in the world, is down 8% so far in 2016, basically 2.5 months into the year. They're down over 8%. And they say it's due to collapsing liquidity. When they try to get out of positions, the liquidity is not there. And so far therefore they're taking bigger losses than they expect on certain positions. Again, it's all different markets that they trade in. So it's just we've been talking about liquidity problems in markets, especially treasuries and whatnot. The Fed has been reluctant to admit there's liquidity problem. And here you have Citadel, which works very closely with the Fed, by the way, admitting that a big part of their problem why they're down over so much for the year is because of collapsing liquidity. So it's like they're both talking different stories, but you have to believe the guys that are managing the money rather than the Fed that's making suggestions and forecasts. Let's go over the trades. US dollar Japanese yen correlated with pound yen. Like I said before, they're both highly correlated, or in the tune of somewhere around 90%. They became uncorrelated, and we were able to put the position on. We had 20% of our normal size in US dollar Japanese yen. We had 15% of our normal size in pound yen. Why? Because pound yen is more volatile than US dollar Japanese yen, so therefore you have to take a smaller position. If you go 1-to-1 and you're wrong, you could be losing quite a bit very quickly, just because pound yen moves more so and quicker than US dollar Japanese yen. But as it turned out, they were pretty good to us. US dollar Japanese yen, we were long from 110.910. This was the big winner in between the two. It ran up, we got out this morning, 111.699, picking up 78.9 pips, or size adjusted 15.7 pips. Pound yen really didn't do much, although you could see here all the action. You're going to get in them at the same time and out of them at the same time. So when we got out of US dollar Japanese yen this morning, we got out of the pound yen at 160.518. We were short from 160.657. So really not much movement there, 13.9 pips. On a size adjusted basis, you're talking about 2 pips. So obviously the bulk of the move came from the US dollar Japanese yen. Although the pound yen had a lot of movement, it's a lot of noise in there. So we'll take it for sure. Really solid trade. Not a lot of directional risk at all with correlation trades, as you guys know. We've been getting more and more correlation trades this year because it's been very volatile right from the beginning of the year. So let's hope that keeps up as far as our correlation trades are concerned. We'll be looking for more this week. Hopefully we get some. So that's it. We're going to wrap it up. If you're still trading now, good luck. If any signals come out, they'll be coming your way. And we'll be back tomorrow, assuming we get some action tonight or tomorrow morning. Have a great rest of your day.